Welcome to our final program for the day on Maybank Invest ASEAN 2022. The theme of this session is about the banking industry's transformation and aspirations to stay relevant amidst trends of rising affluence, a lean towards multi-polarized world, and increasing digitalization. How will the industry respond to these challenges? And what factors will determine its success? How will changing demographics and the needs for diversity and inclusivity impact strategy and stakeholder returns? To address these issues, we have a great panel lined up for you, which includes Sharon Tan from UOB, Niha Manu from PwC, and Dr. Muzaffar Hisham from Maybank. To moderate this session, I'm very happy to invite my colleague Dylan Wickramasinghe, who is Maybank Singapore's Head of Research and also the Regional Sector Research Head for Financials, to take over from here. Dylan, over to you.
Thanks, Seng Yao, and welcome everyone. Yeah, listening to the last sessions in the past 1.5 days, it's clear we are living in unprecedented times. We are shifting to a multipolar world, as Seng Yao said. Supply chains are reorganizing, demographics are reshaping, and the need for action around sustainability is becoming even more important. Southeast Asia is at a crossroads with huge changes going forward. And the banking sector is one of the key engines of capital for the region, and it will play an oversized role in this journey. What shape will it take? What are the opportunities? What are the risks? We have one of the best panels to discuss all this today. Joining me is Dr. Muzaffar Hisham, Group Chief Executive Officer and Head of Global Banking at Maybank. Dr. Muz has over 20 years of experience in banking and financial services. He was named Islamic Banker of the Year by the Asset AAA in 2013 for his contribution to the global development of the Islamic finance industry. Dato has been extensively involved in corporate debt and financing. He was also a pioneer in several key debt and corporate restructuring exercises during the 1997 financial crisis. Prior to Maybank, Dato had tenures in CIMB Investment Bank and HSBC Amana Malaysia, where he oversaw their IB business. Joining him is Sharon Tan, Head of Customer Franchise Group Retail at UOB. Sharon has more than 22 years of retail banking experience across Singapore as well as the region. At UOB, she oversees customer segmentation as well as data and analytics functions. She's responsible for the enhancement of segment propositions and transformation of UOB's business analytics function to drive higher data monetization by embracing big data and advanced analytics. Sharon also serves as the data steward and data protection officer for Group Retail. And last but not least, we have Niha Mani, Director, Strategy Consulting Practice from PwC. She brings over 12 years of experience across consulting and industry with stints at PwC in the US, Japan, as well as Southeast Asia. Her focus is on the financial services industry, and she leads the digital banking agenda broadly across the region. She drives the strategic agenda for some of the firm's largest Asian banking clients. She holds an MBA from a Booth School of Business at the University of Chicago. Now, ladies and gentlemen, so let me start off. Dato, maybe I start with you and saying, banking strategies post-GFC has been built on this assumption that the world is getting smaller and more interconnected. But what we've seen from the 2020s is this is unraveling very, very quickly with the pandemic, populism, Russia, Ukraine. So is it time to redraw the growth map?
Hi, good afternoon. Once again, thank you for having us, and just a shout of great work of the Invest ASEAN to the team as well. No, I think it really emphasized further from the global financial crisis at both sides, the Asian financial crisis and the previous global financial crisis as well. We have to stick to the fundamentals of the how capitalized the banks are, how we position ourselves in each of the countries, and particularly in Southeast Asia as well. Certain parts of the businesses need to further solidify and, if I may use the word, slam down further, particularly because of the pandemic. I like to highlight on 3 key areas, I suppose, in observation further when we see from the last 2 years that we need to take a look. And number 1, obviously, trade. how efficient the banking sector needs to play a bigger role and make it with the technology in efficiency of the supply side and the demand side as well. And a conversation that is continuous to complement that. Number two, we see, particularly this part of the world, in increasing of wealth. When I mean by increasing of wealth is the overall wealth management from the lower income, middle income, and the high income part of it. Just some takeaway ideas and so forth, where you do see more and more the need of a general national unit trust, for example, or using technology in how you distribute some of the subsidies and furlough if need to. So that is an interesting proposition to look at, and how the banking sector could complement that. Last but not least, it sounds simple, it sounds straightforward when we all got stuck in the home, is home ownership. And I think in ASEAN in particular, which I think for us here as well, we're quite passionate the fact that eventually families or folks need to own homes to help with the overall ecosystem, with the development, with the government, and more importantly, how could folks afford to own homes? Because part of homes is you're able to increase wealth in that sense. So I think it's more to really focus on the fundamentals, despite the headline news of inflation, supply side, and so on and so forth. Thanks, Dylan. I'll pause it for a while. Cheers.
That's interesting. So focusing on the fundamentals, and you mentioned owning homes, and that's an area that I want to unpack a little bit more as we go forward. But maybe Sharon, can I turn to you now? I mean, when you look at ASEAN, as I said, it's very, very exciting. You know, the consumer class is growing very rapidly. Over the next decade, 1 of every 2 upper middle class or above households are expected to be from Asia, and 1 of every 2 transactions made is likely to be from a consumer in Asia, from the region. So how will retail banking respond to this opportunity? Sharon, you need to unmute.
Thank you. So I think retail banking is definitely seeing all the changes and recognizing it more as an opportunity. As much as a lot of people are viewing it as a threat because there are also digital banks actually coming in. But because of what you just mentioned in terms of the growing affluent, especially from the rising middle class in the Southeast Asia countries, there is actually a lot of opportunity where the underbanked who is not served today can actually be accessing this banking facility. So whether it's actually the saving, transacting, or borrowing needs, this saving needs can actually be addressed mostly actually on our app, which is also why we actually launched our Tomorrow app in Indonesia and Thailand. With that, it actually helped us to scale our acquisition in those markets in serving their needs. And obviously also, as they grow in affluence and when there's need for them to actually do more, whether in buying a house, whether in investing, that's where our omni-channel strategy with our branch network is able to serve them. So truly, I think this is a time where we are seeing a lot of opportunity, and how then do we actually scale our reach through digital platform, and obviously also harnessing it with branch network.
So Sharon, you talk about digital platforms and you talk about scaling, and one of the things that we see in the region is these big digital ecosystems, the Grabs and the Cs, and consumers, as you rightly say, are becoming more and more mobile first. So how would banks start to define their relationships with these big ecosystems? Do you see them as partners, or do you see them as threats? How do you actually start looking at defining these relationships?
I think increasingly we really see them more as partner, and how the partnership really help us, whether in actually enhancing our value proposition, in terms of rewards that we can actually be extending to our customers. So you may be aware that in Singapore we partner Face, who has actually a huge merchant network, right? With that, it gives our customers access to their deals, and that also allow our customers to be able to earn rewards, whether it's actually on their platform or it's on our platform. Besides this partnership where we extend deals to our customers, I think other partnership where today we come in more as a financing tool. That's where our Tomorrow Pay come in play. So I think in Indonesia, we're partnering with I think it's Biniki or Minika, one of the leading e-commerce platform. Where here through the Tomorrow Pay, customers can actually enjoy interest-free given up to 90 days and so on. So how we really see the whole ecosystem coming through is that how we can extend, we can actually embed, and then obviously together we can actually bring a stronger value proposition to the retail banking customers.
Thanks for that, Sharon. I do want to remind the audience that if you have any questions, please put them in the Q&A box, and I'll get to them. Neha, ASEAN has a very large unbanked and underbanked population. I mean, it's become almost a mantra to say that digital banking will be the answer to all of this. Do you really think that that's the panacea, or are there other ways to bridge this gap?
Thank you for asking that question, because I think especially where we stand in Malaysia right now, looking at the BNM has just issued the mandate for the 5 digital banks to be set up. And I actually am working with one of them very closely and supporting the implementation. Absolutely, right? Like, especially in economies like Southeast Asia, where I wouldn't even say consumers are becoming more mobile comfortable. They've really jumped the entire internet online trend, and it was always mobile first, right? In this part of the region. When you think about really servicing those underbanked sections of society, making services available in a cheaper, faster, easy to access manner will absolutely be key. However, that alone will not solve a lot of the systemic issues, because alongside that, like the government is doing here, there is a lot of financial literacy that needs to be sort of embedded and distributed across the entire demographics that you're looking at, right? Like, because having access to financial institutions and financial institution services is one thing, but really knowing how to use them and how they benefit you is the other. And I think it's also finding this hybrid between, especially when you look at really remote regions, right? You may still have access issues with digital banking, and you may also argue that there will be more multiplied, because now I genuinely, if I don't know what I'm doing, I don't have a bank to walk into, a branch to walk into, see a human, ask my question. So this is where the hybrid of like agent banking is also really, really important to really disseminate a lot of this digital banking use. So by that, it's really having agents sitting in your remote rural areas who act as the mobile teller, right? Like you can go and transact via them. And that I think will be really critical in economies in this region where you see a lot of economic inequality, right? And so absolutely, technology is the path forward, because that is how banks can manage their margins better. They can deliver services in a cheaper, more efficient manner. But I think there are a few disclaimers to that on financial literacy and also enablement, at least at the start of the journey.
Yeah, so that's very interesting that you talk about financial literacy and enablement, and you also talked about this great leap into mobile. So my question is, and you talked also about the agents in these remote areas. So my question is really, does a bank branch really matter anymore? Has bank branches kind of had its day? I'll probably get Sharon also to chime in, but Neha.
I think that question, I think it's been on every CEO's strategic agenda for the last 5 years. So I think everybody on this panel will have opinions. I have mine, and this is a healthy conversation, right? I absolutely think that I haven't spoken to any CEO at any financial institution that is not trying to reduce, and I say this, I will even extend it to insurance, right? That is not trying to reduce their physical footprint. However, are your populations and your demographics across the set ready to move, right? And the answer to that perhaps is not an unequivocal no. So what we do see is a lot of these kiosk branches. You minimalize the set of services that you produce, that you service through the branch. You really try to push your customer onto other channels, be it mobile, be it call centers, And when those channels cannot service a particular type of demographic or a type of requirement, that's when you go into these kiosks banks. Like literally think of them as ATMs manned with a couple of tellers, right? And we've also seen a lot of like innovative co-location strategy that instead of existing in your traditional areas, you may also find like there's a commercial tie-up that's actually underway in Japan where they're going to put it in a lot of their versions of like big superstores, right? So you go to your groceries, you have a request on your banking needs as well. You walk into this kiosk, there is a teller that is servicing these needs. And again, location will be key. Where is your demographic sitting that requires assistance, right? Like this is where the customer segmentation needs to get a lot more smarter, both from an external perspective of like what products do I take to market and to whom, but also from an internal perspective, how do I segment my customers in a way that I can service them best in the most cost-effective manner?
Brilliant. Sharon, what do you think?
I think we very much believe that branch will continue to play an important role in serving our customers. I think as the customers' needs evolve, I think when you are opening a saving account, when you're actually trying to do basic transactions, or even borrowing, taking up a personal loan, you're probably comfortable doing it on a digital platform. But I think when you are discussing about bigger transaction tickets, for example, you're trying to actually take a mortgage, right? That is going to go in excess of $1 million. You're trying to invest more beyond your regular 100, 300,000 a month, right? You're trying to go into something 50, 100,000. That's where I think you value face-to-face. You want to be speaking to somebody who can explain a bit more, who can also call out to you some of the things to be mindful of. So I think that's where the branch will actually play, a critical role, where we are able to meet our customers face-to-face, address these queries. But I think the earlier point where we mentioned about branch format, where we talk about location, where we actually, locate our branches. Obviously, these are actually key consideration. I think increasingly, we are looking at where our customers actually bank, where do they play, where do they live, so that, we are then actually putting branches where it's really catering to their lifestyle. That's where they can also do banking, right? And also the format of the branch. So increasingly, people are coming in to do more advisory, right? Wanting to sit down, have a conversation to understand where they stand in terms of their financial position, in terms of their investment goals. They like to probably do this in a closed, enclosed area. So that's where you have more meeting rooms rather than, having a big banking hall, people coming in, doing cash withdrawal, cash deposits. So I think that's where we really see branch continue to play a critical role, but obviously evolving to address more complex and sophisticated needs rather than just coming in for people to do deposits and withdrawal.
Right. So complex evolution. I mean, I do want to stay with you here, Sharon, and because one of the things that I've been thinking about is, when you think about branches and how everything is evolving, who actually is the new retail customer, right? I mean, when we look at out there's a lot of changing attitudes, in terms of asset ownership, alternative models being preferred in terms of sharing, rental, subscription economies. So will the conventional financial service, Dato also talked about mortgages and home ownership, things like that. Do you think they will be as relevant as we go forward in terms of, say, mortgages or car loans, or will they change? What do you think, will happen?
Yeah, so I think we're definitely seeing the sharing economy growing. People actually, grabbing, people actually, uses the sharing of facility and so on. But what I think remain, key when it comes to Asia is actually home ownership. I think to the earlier point mentioned, I think Asian in general sees, is kind of deeply ingrained in them to kind of own a roof over their head. And I think beyond the home ownership, I think there's also the belief that, mortgage or property as an investment asset classes has also delivered, favorable returns for many. So with that, I think people would actually continue to see the need to actually borrow to finance a property, even owning of cars. Right, as much as people like sharing, the convenience that comes with it, I think as people grow in affluent, you continue to see them actually wanting to be able to own something, right? To be able to own their own cars to be able to move around. So we don't see the need to finance a mortgage or a car going away. In fact, we think that obviously as as people grow in affluent, there's actually a need for that. And then how do we actually come and finance? And I think the whole financing journey has actually changed quite a bit over the last few years. The whole buying journey started off online, people researching online, people wanting instant valuation, thereafter even applying for a loan without having to fill in all the papers. So I think here again in UOB, I think our whole home solution has been engineered around the whole buying journey, so that from the point of assessing down to eventually you getting a valuation and applying, you get that through online as seamlessly as you want it to be.
Right. Okay, so seamlessness. Neha, I just wanted to bring you in here and talk about we talked a lot about real assets, but then we need to also talk about the assets in the metaverse. I mean, we've seen JP Morgan, they've set up the first sort of US banking presence in the metaverse. Do you think we'll see metaverse banks from Southeast Asia?
I think we've already heard an announcement, right? Isn't it DBS in Southeast Asia that's already announced in April that they are going to build a metaverse presence, and right behind them is HSBC. So I think we're already seeing that. Jury is out in my mind on how much of that can actually develop in this region. I think it's a great platform for banks to find another way of engaging with customers. And I think that's really what this whole metaverse play will potentially be strategically in the upfront of its evolution, right? It's really about getting there first, having some sort of presence there and driving some amount of customer engagement. But it's also like the regulators here in the region are very clear on their stand on crypto, right? I don't think all of those things are going to flow into the economy very quickly. Or I would say if I'm taking a next 2-3 year outlook, especially in the economic environment that we're heading into, right? So I'm not entirely sure what the business implications of this will be, but absolutely for customer engagement, I think banks will start moving in that direction, as we're seeing with a couple of banks already announcing their intentions. Right,
thank you. Okay, let me change tack a little bit now, and and let's talk a little bit more on the wholesale banking side. And Dato, let me bring you here. We've got ASEAN GDP growth this year expected to hit about 4.9%, overtaking China's 4.5%. As a region, Southeast Asia has always looked north for growth, and banks have not been an exception to this. We've seen quite a few ASEAN banks increasing their North Asia exposure over the past decade or so, or actually developing strategies to kind of tap into this north-south supply chain flows. Now, with China slowing, are these strategies at risk, or do you think they need to change over the next decade or so?
I think the new bridge is China, Indonesia. It's going to connect somewhere, somehow in between ASEAN. I mean, I'm going to go out of the limb here saying it's a little bit unfortunate, the zero COVID policy bit. And I was just talking to my colleagues in Shanghai. We heard about it opening up, but then they say, yeah, it's opening up, but 2 regions open, but 8, 9 still closed. So this is just a glip that we have to go through this process. I still believe the connectivity of ASEAN, and as cliche as it may sound, with China, history has also shown the overall connectivity through the Straits of Malacca and so forth. So the growth is still here. We are here for long term. The tough part is how do we prioritize that capital and focus on which part of the region and so forth. 10 years ago, we were looking at Myanmar, was about to opening up, then it just contract. Then Cambodia and Vietnam suddenly start to pick up in that phase. So the challenging part in that boardroom is to see how do we allocate that capital and how fast that turnaround that we want to take a look. I had a very smart CFO before mentioned to me when I was running in the Islamic bank, and he was commenting, Mus, you just focus on 3 C's actually: compliance, capital, costs. You're about 80% there, then you manage it. And it's quite interesting on a conversation about digital bank just now. It's at the back of my mind. Eventually there must be some form of equilibrium of how they would collude on compliance and capital eventually. It's nice to have all the app and so forth, but for folks like me and Sharon, eventually, in the boardroom says, how's your return on capital looks like? on that perspective. But this is definitely an area, a region that is growing. I think it's how do we navigate that? I think that's the tricky bit that is going through. There's been some exciting couple of years. The good news is I think most of the financial institutions have learned the hard lessons over the two major cycles. That means the increase on the buffer of the capital. I thought the repayment assistance or the repayment support, working with the regulators and central bank helps a lot in resetting during the pandemic. So I think we've learned that part, and that's the positive part that I'm looking forward to it. The next journey is now, how do we fine tune it? How do we oil it? In that sense. Thanks.
Thanks, Sato. I want to stay with you and still, dig a little bit deeper on the whole corporate and wholesale banking. One of the biggest sort of shifts we've seen through this pandemic is that, current supply chains are under a lot of stress across the world. The whole sort of just-in-time mantra has now become just in case. So how is this, when you're having conversations with your corporate clients and so on, how is this kind of reshaping your corporate banking relationships? What are your RMs saying, and what are you, how are you kind of responding to this?
I think over the last 6, 8, 9 months, there's a lot of resetting conversation. My cash flow got stuck, or my supply got stuck. But having said that, there was some also certain industries that's gone very well. So I think the basic of cash flows and resetting was a lot of that conversation. Of course, the tricky part is for banks, of course, with the accounting standards of the IFRS 9 on the provision side and so forth. That makes it a little bit tricky. I do feel there was a little bit of divergence of expectation between, yes, we want to help the clients. In between, the expectation of the shareholders is saying, I'm looking at that delta growth. And in between, the regulator is saying, how do you help and make sure your returns are still there? So that ecosystem has been quite interestingly, I must say quite hilarious at times. And when you look back at the rear mirror, it says, hang on, there's a pandemic just gone through and we're going it out. So I think it's taking step by step on that. So it's a bit of a balancing act between that returns and managing the client. I would always recommend to our board, and how do we navigate with our client, is how do we look at it long term. I know it's a bit of a cliche of sustainability and so forth, but it is, we got to look at it long term. They are our clients. How do we hold hand with it? How do we manage that cash flow together? How do we manage that impairment and so forth? So that was some of the tough conversation that's gone through, but also very fulfilling conversation in looking at how do we turn around, especially these first 2 quarters of 2022.
Yeah, just adding to that, when you think about cross-border transactions, which is one of the lifebloods of trade finance, you've seen some bottlenecks there as well. How do you think banks will kind of respond to that? Do you think there'll be more technology solutions being adopted, particularly maybe the distributed ledger and things like that as well?
Oh yeah,
what do you think? What do you think?
Oh yeah, most definitely. I think the question mark is, maybe Neha can jump in here as well. What type of technology are we talking about? Yeah, blockchain. We have a conversation with API. I sound like an expert, each time my team would say and so forth. And I say, yeah, API and blockchain. How's the cost going to look like? But I do believe when I mentioned about the trade part of it, when I mentioned about the trade, it's just not the banks on my end or our end looking at the wholesale side, but connecting with that major client with their suppliers and also their buyers as well. And this is where I felt the banks can enhance an opportunity for us to really connect with their SME clients with the conglomerate. In the hard lesson that I saw in the pandemic, we always look at one of the clients, but we somehow forget to link with the SME part of it. And you know, it's easier said than done. And this is where I was really revisiting back with the team, and we were discussing it as well. How best we can look at not just a technology solution. Of course, I may be some bias regarding the Islamic side. I believe in that buy and sell, you free up your commodity space, or you free up your goods. And how do you commoditize that, monetize that with your supplier and connect back to the whole supply chain? As I said, that's a real opportunity there we can look at using the technology. It can be quite complex, but if we get it, fine-tune it, oh wow, I mean, players like all UOB or us and so forth could connect the dots of FX, trade and cash, the whole flow part of it, and we can add value to it. So that's I think the name of the game for the next couple of years. How do we pinpoint that part? Thank you.
Great. Neha, do you want to add anything to that?
Absolutely. I think it's a great point, right? And especially on the SME side, because right now we're still very much in terms of a maturity around really how do I fund my business? Like if you think about a pyramid of, business needs, right? It's like, how do I establish my business? How do I fund my business? How do I run my business? And then how do I grow my business? I think most of the concerns are still very much around how do I fund my business? And I think to tie it back to the corporates, right? It's an accounts receivables, accounts payables game, right? So programmatic financing, for example, which is exactly what I think Dato here was referring to, really finding within your corporate book of business, those businesses, those corporates that you can then help downstream finance the SME value chain, right? And what that allows you to do, because the biggest challenge with trade financing is really verifying the underlying trade document. You have a lot of products on the market today which are still collateral based. It's not true trade financing. It's still collateral based financing, which is like saying, Neha Mani is a small business owner. She's put up collateral of about $1 million. Against that collateral of $1 million, we're willing to lend her up to 2.5 in revolving lines of credits and different types of mix and matches of products. But it's still collateral based. I think the shift is now towards how do you actually fund against the underlying trade documents. And one way for this whole, and I really like the 3 C's example as well, really, how do you manage your risk and your compliance in that framework, right, is by anchoring on your corporate client base. So look at your corporate client book. See, for example, we've just helped another bank in the region set this up as a pilot in India, actually, one of their biggest markets, where they've taken 3 corporate clients that they want to then trade finance their SME value chain down to, right? So how do I then finance the invoices that these corporates are raising for these SMEs? And I actually have a lot more reliable data through these corporates on these SMEs, these distributors that are taking the corporate product into market, right? How do I use those pieces of information and drive a smooth user experience? And you have benefits on both your wholesale banking side and your corporate banking side. And this is just really one great example of this entire trade financing problem that is staring us in the face in this region.
Thanks, Neha. I want to stay with you and talk to you about young people. There's a study in China that showed that the share of 12 to 24-year-olds holding credit cards is 20% lower than the older generation. But they actually have more debt, using embedded services like BNPL, buy now, pay later. How will this impact what has traditionally been cash cows for banks, and also from a risk management angle as well?
Yeah, and it's funny, as I was waking up this morning, I saw a news article about how Apple has now launched their own BNPL services. Like, I think it's just in the news today, or maybe I just saw it today, right? And it's also, I laughed because I don't know why you're asking me about young people. I have to add to that conversation. No, but more seriously, right? And I think it goes back to this entire changing attitude towards both, actually, and you see it a lot more pronounced in the US. It's so consumption driven, right? It's just, there is no conversation. Like the net savings ratio in the US in the economy is negative 24% or 28%, if I remember my facts correctly, right? Huge shift in Asia from that. I know that's nowhere near the value system of what you see in Asian economies, and thank God for that, frankly. But I think you will see more and more shift towards these BNPL types of services. You also have a lot of challenge coming up from providers like GrabFin that are embedding into their platforms a lot of financial services, which are becoming a challenge for banks, right? You can also fund your rides through GrabFin, right? So it's not even just about like big home purchases or retail consumption purchases. I think it's going to be interesting. However, I don't see how it's really different, right? Because one thing that I don't understand in that question is wallets have been here for a long time, right? Wallets have already been monopolizing a lot of your cards businesses, right? BNPL is just another form of that. And you actually see a lot of banks being able to at least service that in the back end. Apple is one example which has now gone ahead and said, we're not even going to tie up with the bank. We're just going to finance it. A corporate is going to finance BNPL services on our own. And their whole risk management strategy on that front is, you don't pay us back once, we just don't lend to you in the future, but we're okay to lose the money up front. So that's an interesting take on risk capital. How people, and I think banks can, mirror some of that, is have an allocation of funds that is commensurate to what you're willing to lose, right? And really refine your credit risks model. You can only learn by lending. You can only learn and make your models smarter by seeing what the outcomes in the market are, right? Because truth be told, like the data infrastructure is just not mature enough here to do a lot of what sounds sexy on paper, alternative data risk modeling, right? More of it is likely possible on the retail side. Definitely, we just did this for another bank in the region where we were trying to see how you could use alternative data sources to make better decisions in the SME banking space. And frankly, the infrastructure just doesn't exist right now. It's going to come in the next 2 to 3 years. But in the interim, what you can do is, again, an Indonesian bank is already doing this. Take a pool of money, lend it out, and iteratively monitor it, monitor the returns, monitor the assumptions, monitor the outcomes, and make your models smarter in-house. What are your lending outcomes on that pool of money? And the more confidence you grow on that, you extend that pool of money. And that's really one of the most practical ways in overcoming this data challenge, which lies at the heart of making your risk management smarter.
So lose some money, yes.
Thilan, can I just add that I think Neha mentioned interesting about, debt versus investing into your client. I just wanted to share just a minute. This was an interesting conversation during the height of the pandemic because some of the policymakers were talking about, should we put some furlough, or should, in Malaysia, we're talking about releasing the EPF funds and so forth. And there was this interesting conversation from a lens of a couple of the experts are saying, we should provide a furlough, but it's not for free. It's an interest-free loan to support the families of a certain level of income because they got hurt during the pandemic. But the benefit for the bank is you're investing these folks. It's still a loan. You can pay back in 3 years or 4 years, but you could see the pattern and so forth. And eventually, with a big assumption that they will grow their wealth in some form after the recovery and so forth, but you're providing a simple support, right? But of course, Sharon can vouch this in myself. If we were to provide an interest-free loan, and in Islamic, there's a terminology called Qadr Hasan, a benevolent loan. I think Sharon will get shot at by the board and say, what's your name's going to look like, But I thought it was very interesting because you are investing in that household. These folks has no debt because they can't get the debt, but you're putting, X amount of 10,000 ringgit or 15,000 just to help them out for the next 5-6 months. You're investing it with the technology. You can see the pattern and so forth.
Yeah.
And eventually they say, okay, I'm ready to go out there. I've got a job. I want to buy a home. Hey, first, right? Could you come to me? you got to sort of this loan first, and you're picking up because it is the pattern. And as I think Sharon and Neha may be aware, if we were to take a loan, we got to provide our pay slip and so forth. So now we're literally looking at patterns as well, and that's something was very interesting. But Neha, I want to mention, Thielen talking about being young. I think she meant all of us being young.
Thank God.
Absolutely,
I just got to rub it in, man.
yes, absolutely. Sharon, let me come to you. I want to kind of talk about another demographic, which is the wealthy in Asia. What sort of shape do you think wealth management will take going forward? I mean, we've talked a lot about technology and things like that. There's this huge demand for hyper-personalization, but at the same time, there's demand for scale. And then as a bank, how do you kind of balance between the trust, privacy, as well as the profits angle as well? So what do you think?
So I think to your point, increasingly, hyper-personalization, much spoke about. People are expecting, customers are expecting us to actually come to them with relevant messaging offers, right? In the meantime, obviously, the awareness of their data being used, to your point, privacy becoming an issue. Something that, I think, in the whole of ASEAN is getting, people are getting more aware, which is why also PDP is being introduced, here in Singapore, Thailand. What I think is really coming true is that people are aware of data being used, but I think what they are actually looking for is what is the value do they get out of their data being used, right? Customers are sick of you inundating them with a lot of offers, sending them things that are not relevant. So if those data are then translating to insight, understanding them better, giving them products and services that are relevant, sometimes even better pricing because of the fact that how they are actually transacting, how they're actually repaying. So earlier we mentioned that even with alternate data, even with actually you actually paying some other sources telling us that you're a good paymaster, allow us to actually extend a loan at a better pricing because of the fact that you're not going to actually, not be able to pay. I think those are really good outcomes that we are seeing, meaning that, how we can hyper-personalize for you with your data and you benefiting it at the end of the day. So I think this is actually quite well received, especially among younger customers, right? So they are happy actually upfront, even is in cases where you sought consent from them when you're asking them, we are going to actually use this data together with actually data from other sources to actually better understand you and so be able to serve you in this area. They're happy to give that consent, and that's where data has been used. And in the area of wealth, I think this is actually even more important. Because I think for the longest time, when you bank with one bank, they only actually have, your holdings with them. They don't actually have your full financial standing. And here in Singapore, you're probably aware that we actually have what we call SG Findex, which was launched more than a year back. So again, with the consent of customers, you can actually pull his holding across all banks to form actually a consolidated view. And this is where, again, data play an important part, knowing exactly, how much you're holding, your investment objective, how can we better advise you? So again, we are then, personalizing the whole approach. We're not saying that just because your risk level is so, your appetite is so, this is actually what we are suggesting to you. We have a view of what you have, and therefore we are able to tell you or even share and guide and advise you what is going to be, a way forward, right, to get you to actually achieve your investments objectives. So I think that's where we are heading to, and we are seeing actually more of people willing to actually share console so that they have full view, and with that insights help them to achieve their financial aspiration.
Right. And, kind of staying within that, I mean, one of the things that we've seen is, one of the sort of topics of conversation is this great wealth transfer. ASEAN, Southeast Asia, we've seen this phenomenal wealth growth over the past sort of 30 years or so. A lot of those sort of first generation wealth is now moving to the next generation. What sort of opportunities do you see as this great transfer happens? I mean, and also, do you see a need to change the sort of products or that you offer?
Yeah, I think definitely the product needs to evolve. I think the younger generation again are actually also more open to different investment asset classes. I think so that's where the product suite is evolving. But I think to your earlier point, as we see wealth transfer from one generation to the other, I think here in UOB and actually very much in the banking industry, we have actually started to engage what you call your second generation, right? Very much getting them on board even before the wealth transfer happened. Whether through actually what we call second generation programs, when we bring them in, understanding our investment approach, sometimes also getting them to sit into our our seminars to understand how we're actually investing for their parents now. So I think the whole transfer, even before it happened, engaging the second generation is important. And this is where banks are actively doing. And thereafter, obviously, now that the younger generation are also, more open to actually more investment asset classes, I think that's also where banks are actually bringing in products. They're actually, more focused on ESG. I think earlier we spoke about ESG. I think the younger generation are very much into that. And that's where they look at products that actually, are able to, further, benefit the wider, environment and so on.
Absolutely. I do want to unpack a little bit more on ESG as we go forward. And I want to stay with demographics here, Sharon. If you look at across ASEAN, we're seeing this increasing labor participation, rising incomes, increased inclusion, and a larger role for purchasing decisions for women. There's some research that says that it's set to add about $3 trillion to consumption by 2030. How do you think banks will need to respond? And even more than that, is there actually a need to tailor any specific products for women?
Yeah, in fact, that's actually a topic that's very close to our heart here in UOB. And I think most of you on this call are probably aware that we are actually the first bank in Singapore as early as 1989, where we actually launched what you call UOB Ladies Card. So at that point in time, that was the only product in the market that was actually catered for, the women segment, right? And since then, we have actually evolved to go on to actually customize products just for women, whether it's a saving accounts that also come with insurance coverage, right? Whether allowing them to customize the kind of rewards that they want to receive, that's in line with their lifestyle, that's in line with their preferences. So we see a lot of value in actually customizing for this segment of customers, who are actually, clearly telling us that, they actually value choices. They value our understanding of what they need, right? And how in return, they are actually picking up products that actually suit their needs. So choosing category of rewards that gives them better returns because that's in line with their preferences. Going with saving accounts that also gives them insurance protection, they're actually more relevant to their segments. So I think it is definitely something that we have started and something that we continue to work on to make sure that we evolve as the generation evolved.
So there is a very clear need for very specific products for women. So Dato, I want to bring you in here as the only male member in this panel. And given the fairly general male dominance in managements and the boards in the banks, do you think that they get it?
I think they do. And I truly believe, and I even if you look at the financial institutions that has more diversity, more inclusion, I think most probably the analysts can do a simple sort of correlation, measurement of diversity versus their price to book. I'm not surprised there is a positive delta growth on that perspective. I'm not mentioning which financial institutions. I mean, I had some conversation before with some of them, and this is, if you look at the charts, you would most probably able to guess. And I said, your management is all male dominated. Your your population of your banking side is with a certain groups, it's a recipe. Yeah, going out of the limb again, it's got a recipe for disaster. So I think the ASEAN story again, the diversity story. I'm not just saying it's out of just sort of a cliche of it. The data shows the diversity would help, and I think that's the way forward. There's no doubt about that, and I truly believe in that. Yeah.
Great. Thanks, Dr. I want to bring Nia here and talk about another large demographic, which is the seniors. They're set to grow by about 40% in the next decade. How do you think banks will respond to that need? I mean, there's this, drive for silver tech emerging. Where do you think the most innovation is needed, and where do you think it'll come from?
So before, Thilan, and I apologize for ruining your flow here, but before that, I do have something to say on the women topic, because it's a topic, as you can imagine, close to my heart, right? I think while I agree with most of the things that have been said, right, especially if you look at, again, SME banking, which is, again, one of my domain expertise, I actually disagree with the statement that products need to be differentiated. Product needs in banking are all the same, whether you're a man or you're a woman. You need financing, you need deposits, right? Like, that's it. You need access to financial institutions. It's financing and it's deposits. It's lending and deposits. I think there is a lot of systemic barriers, and they continue to exist in how those needs are distributed to women, especially women entrepreneurs. And this is like well born in the data, right? And I think one example, when we were preparing for this panel as well, we were talking about this, Thilan, around the biases that you see in a lot of the RMs, right? Your credit decisioning. So there is a statistic, especially it's true for the Indian market, I know that for sure. There's rejection rates for the same businesses owned by women versus men for the same cash flows, so the same projections, for the same financials is almost 7x higher, right? And there, I think banks need to do a lot more in how they train their RMs. And this is where digital, again, plays a huge role in enabling gender agnostic services, right? Because human beings by their very nature are biased. So there is responsibility on the banks to upscale, train, broaden the mindsets of the RM male population that is servicing women. And two, there is a requirement to try and drive as much more service as you can from gender agnostic channels, which are digital, right? It really opens up access. And again, especially very, very sincerely close to my heart. So I couldn't sort of not say something on that topic.
No, I think that's a very, very important point.
I'll transition to the question that you were asking, and now I feel much better because you asked me about the old people as well. So now I feel like in my
You're balanced.
Yeah. I think on the older generation, right? Look, there is a lot of innovation, and I think this is where when you look at the digital landscape, actually you see a lot more silver tech right now. The front line of the innovation is actually in health, right? And I think there's a lot of lessons to be learned from that for banking. I think it's very hard to answer that question in a way, because it's a way of how do you actually meet their needs, and how do the needs of the demographic change as you age, right? So it's really about what kind of services are they looking for, and how do they want those services delivered. And this is where I actually agree with Sharon. This is where I was talking about the hybrid touch point, or the banks having branches may still exist, right? But really about how do you then use those opportunities and those touch points to drive more education around your digital channels. And then when you think about it from a product perspective, like where is that turn, right? So now you'll see more innovation around how do I take different health-oriented products, right? So in South Africa, actually, I was there for a vacation, and it's probably the most eye-opening insurance product that I've seen there for old people, connected to wearables, connected to where you shop. They actually give you, and this is the bank facilitated product, right? They give you points back on your insurance premium, right? So this is also where insurance and bank assurance has always been a clean channel. There's a lot of innovation to be had there, because again, there's a lot of innovation in the health sector that you can piggyback off of and just tweak those services and bring them to banking. And I genuinely, I've been serving insurance as well for a very long time. The model that I saw in South Africa is what we talk to a lot of the insurance and banks executives about, but I've only seen it in action in one of those markets in Cape Town. And it's and then I would say the sky is the limit, right? Like my brother, who is probably just 10 years older than me, so not in that demographic that we're talking about. Everybody, his entire corporate, he has a startup, the entire corporate is using that, right? Like so it's really like, finding those opportunities and really tailoring that, using the power of the platform ecosystem to bring new solutions to the market for that better meet your demographics needs.
Brilliant. I'm aware of the time, so I want to kind of change tack a little bit, and we kind of touched upon ESG and sustainability earlier. Dato, we've seen a very big shift and acknowledgement in the banking sector for the need to reduce emissions, as well as to become more responsible towards multiple stakeholders. A lot of the larger banks are building their own ESG frameworks, Maybank, UOB, and also setting, sort of green finance targets. Now, we are in this world where we are facing shortages. We are short of energy, food, and everything in between. And we've seen policymakers getting pressured to increase, output of energy and oil and gas and all those things. So how do you think the banking sector will respond to this? On the one hand, there's this increasing capital demand for energy, and on the other hand, there's their own commitments towards reductions. So how do you kind of have your cake and eat it too?
Yeah, well, that's the you sound like our board. So I just want to answer one quick question. I can't help it. I just saw in the Q&A about the digital bank license, whether it beats the purpose. I just want to answer one word. Yes, it does beat the purpose. We need to consolidate the banks in Malaysia. So I can't help to answer that. But
sure.
But Thilan, going back to your point, I think the quick answer for me, for us to balance up in particularly the emerging markets, is carbon credits. How for us that can play the role in creating these carbon credits. We can't run away with a lot of the ASEAN countries, which is, well, to some extent, unfortunately, based, a lot of it still dependent on coal or energy. Of course, we're going a lot more on gas and so forth. But I think the one solution that we need to work harder on is how do we create it more and more of these carbon credits. It is a cost, but I'm a believer that eventually it will create value, whoever investing it, in terms of either price to book or PE multiples in any of the investments later on. Thank you.
Great. I want to kind of now talk about, we've talked a lot about technology. We've talked a lot about the macro stuff, right? And one of the things that we can't ignore with banking is people, right? At the end of the day, banking is all about its people, and it's also one of the largest cost items in the OPEX line. And this is a question both for Dato as well as for Sharon. How do you really think sort of hiring practices will evolve over the next few years? What sort of skills do you think will be the most sought after? And also within that context, it's not just about bringing people in from outside. What do you do with the people you already have? How do you kind of manage the transition of their skills? So maybe Sharon, we'll start with you, and then we can go to Dato.
Yeah, so I think there's definitely great demand for individuals with technical skills. As banks, financial institutions are all investing in their technology, right, to build up the whole or enhance the existing system. And I think beyond the technical skill, the soft skills are increasingly getting important. We're talking about critical thinking, we're talking about problem solving, right? Because every time you embark on something, something is going to come true. We need people to be able to think through how best to move forward. And so I think that the skill sets that as we are looking at what evolved, right, as we go on to transform the industry and with the new players that are coming in, and also the evolving needs of our customers. I think to your earlier point, what about existing, colleagues that we already have today in the institution? I think a lot has been done to actually upskill the existing, workforce, helping them to kind of embrace, some of the new tools. Also evolving the mindset. I think here again in UOB, we have a Better You program that was started, I believe, more than 2 years back. So helping people to start, challenging their own mindset, how they are looking at certain things, how do they actually go about approaching, issue challenges, and also applying all the critical thinking and so on. So I think on both ends, when we hire, we're looking at for people with technical skills, given the need to have to actually, invest in technology, and having the soft skills to be able to project manage and so on. And then obviously at the same time, retraining a lot of our colleagues so that we will continue to stay relevant, as things around us keep changing.
So evolving mindsets is critical. Dato, anything to add there?
Yeah, I agree with Sharon. I think on the evolving mindsets, and I think there's a lot to be done in terms of building up talent, searching, nurture them. But I think as an organization as well, we also have to move in tandem of the famous quote of Simon Sinek. We know what we do, we know how we do it, but as a institution, what's the soul of the institution are we talking about? Why do we do it? Again, it sounds a cliche again, or of course in Maybank, humanizing financial services and so forth. But there are, interestingly, talking to the young folks still and so forth, and when they say, why am I working in the banking side? And when they understand and resonate the fact that they are having an impact to the society because of their financial institution, you could see the different sides of motivation as well. Be it they are the traders, be it the brokers as well, or they're in the debt markets and so forth. I mean, it's a different mindset as compared to 25 years ago when we were around in the market as well. They're gone, I think, were the Gordon Gekko's type before in that sense. So I think you got to look at the soul of it as well. Thank you.
Yeah, absolutely. And I think we're all better for it. There's so much more to talk about, but we've run out of time, unfortunately. I want to say, it's been a brilliant hour of conversing with our panelists. Thank you so much, Dato, Sharon, Neha, for joining us today and giving us your time. Hopefully we'll get to do this again soon. Thank you.
Thank you very much, Sharon. Thank you, Neha. Cheers, Dylan.
Thank you.
Over to you, Sangya.
Thank you, Dylan, for steering this important session. And a big thank you also to Sharon, Neha, and Dato Moose for your insights and also a lot of your aspirational views in terms of how the industry will be evolving. To you, our participants and valued clients, in case you have missed any of the sessions, you can log into the same event webinar with your username and password over the next few weeks to experience Maybank Invest ASEAN and to also watch the recorded sessions. On this point, we have concluded the last webinar session for the event, and I would now like to invite Dato Amy Morris, CEO of Maybank Investment Banking Group, to make her closing remarks. Dato Amy, over to you.
Thank you, Seng-Yao. Hello, ladies and gentlemen. It has been a momentous 2 days of Invest ASEAN, and I hope that it has given you fresh ideas, fresh insights, and inspiration. To me, there are 3 key takeaways of the conversations. Firstly, amidst geopolitical tensions, regional interests would be better served by a cohesive and neutral ASEAN, which will continue to become a major beneficiary of any relocation of manufacturing supply chains from China. This came from the 2 morning sessions on the first day with Roger Baker of Stratfor and Professor Dr. Tan Kong Yam of NTU separately, who articulated a possible position for ASEAN in an increasingly multipolar world. Secondly, sustainability and climate transition will be key drivers of opportunity. Professor Tonsi Whelan of NYU Stern highlighted that over the long term, there are strong positive results for investing in sustainability. Furthermore, between 1985 to 2020, the percentage of intangible asset value of the S&P 500 has almost tripled to account for 90% of the index's total assets. Intangibles are things like R&D, intellectual property, and brand equity, which are outcomes of a culture that is future-oriented and people-centered. Maybank's Chief Sustainability Officer, Shahril Azwajimin, affirms that companies exist not just to make money, but to improve lives and solve society's problems. This brings me to my third takeaway point: diversity, equity, and inclusion, or DEI. Aside from setting policies, a way forward for DEI action to be beneficial and successful is to be data-driven. Earlier this morning, Bloomberg chairman and leading global champion of diversity and inclusion, Peter Grauer, said the DEI agenda requires the unrelenting and persistent attention of an organization's top leadership, as it represents the battle for the best talent that can bring impact to climate action, an urgent agenda of our times. The business case for DEI is clear. Companies that embrace it deliver better results. From the region's DEI champions at Bursa Malaysia, the Stock Exchange of Thailand, and EDGE certification, we learned that a judicious combination of regulations and disclosures, targets and quotas, supported by data and training, are powerful levers. By measuring and reporting data or metrics on DEI, we could change behavior and empower the right people to act, such as investors like yourselves. You are in the position to influence your investees to adopt DEI and vote against director appointments that do not add to the board's diversity mix, be it age, gender, or expertise. Ladies and gentlemen, by adopting the mindset of inclusivity and equity, we can create a more just society, one of shared prosperity that will elevate our national competitiveness. This is the ASEAN and ESG opportunity that we want to stress in this year's theme, ASEAN Framing a Future. It is very much aligned with Maybank's purpose of humanizing financial services. And I would like to add this quote by Dame Jane Morris Goodall: "The greatest danger to our future is apathy." There are external headwinds that we are facing, sure, but don't doubt what we can achieve collectively if we embrace our humanity and strive for inclusivity. Be brave. Be the leader ASEAN needs now. I would like to thank our clients, partners, and participants. A heartfelt appreciation for supporting Maybank all these years. We shall continue to grow, prosper, and frame our future together. Also, a big thank you to my colleagues across 6 cities who worked tirelessly to put this together. I'm immensely grateful for the unrelenting commitment to always show up at our best. We are ASEAN, and ASEAN is our home. See you next year.